Today's guest is Mike Dougan. He's a managing member of Independent Business Valuations and Appraisals, or IBVA, in Castle Rock, Colorado. Thank you to Zarlingo Robb, CPAs and Business Advisors in Wheat Ridge, Colorado, for providing a location for us to film this episode. At Zarlingo Robb, they think like business owners. For more information about Zarlingo Robb, please click the link in our website show notes. Hi, I'm Norman A. Hood, financial advisor and host of the Exit Plan Show. I interview America's top advisors, like today's guest, Mike Dougan, to help business owners like you enjoy more personal freedom, grow your company faster, and transfer ownership seamlessly when the time comes. Like I said, Mike Dougan is our guest today. He's from Castle Rock, Colorado. He's with IBVA, and he's a qualified appraisal expert. Mike's completed assignments for federal gift taxes, estate taxes, income taxes, stock options, divorce, mergers and acquisitions, and exit planning. Well, Mike, welcome back to the show.
All right.
We're going to talk about business valuations.
Okay.
This is a really simple question for you, but may not be to some of the people watching. What is a business valuation and how is it used?
It's the groundwork of the whole industry and profession. A business valuation is establishing the present value of a business based on its future earnings prospects.
Okay.
So,
that's just pretty much it. Yeah, you can't sell it if you don't know what it's worth, or you shouldn't.
Right. Well, and you can't plan without knowing what it's worth.
Okay,
and there's a lot of different reasons to do evaluation.
So it kind of tells you, answers the question, where am I at?
Mm-hmm. Okay. Correct.
Okay, great. I know that's just not something you do. It doesn't take you 15 minutes to do it. I'm sure there's a lot of information that you need to put together. What types of information do you need when you do a business valuation?
Well, it starts with the initial contact from the client. The basics are: what are we doing? Why are we doing it? Who's going to be the client? Mm-hmm. What is the intended use of the appraisal? Mm-hmm. And then what kind of data is available? Is it on small businesses? Do they have reviewed statements or audited statements? Mm-hmm. Do we have tax returns available? All of those financial sides of it. And then we need to know whether we have access to management. If it's a husband-wife, we usually just sit down at the kitchen table or in their business and discuss what it is they're trying to accomplish with it, and then take the data, review it, and then come back and do a management interview so that we can go into a deeper dive.
Okay, so you start with the owners and go from there. Okay.
Right.
So what if, you mentioned the financial statements, either reviewed or audited financial statements. What if let's just go to the extreme, what if the financial statements are a shoebox?
Well, shoebox is a tough one to work with, but it can be done. I mean, it takes a little more time. Okay. The real key in a lot of the small businesses, as the technology has come available and cheaper for the smaller businesses, we see a lot of QuickBooks and internal balance sheets and income statements, and the bookkeeping functions fairly automated at this point. Those are fairly easy to work with. You just have to kind of get a feel of which system they're using and where they plug in stuff.
Okay, so somebody doesn't have to have an audited financial statement for your services.
No. I do like to have the internal financials and then a tax return to at least say, is it close?
Right. Okay.
Because we, small businesses, we know that the tax returns are there and are produced to save them taxes.
Right.
And yet the income statement may give us a better picture of the true cash flow of the business. Okay, good.
I know that valuations aren't the only way to determine an estimate of what a company's worth. How does a valuation done by someone like you, how does it vary compared to maybe a marketability assessment done by an investment banker?
There's a lot of differences. With the investment bankers, they usually have a set criteria that they're using, benchmarks where they have to have a certain rate of return, internal rate of return. Those are investment values. a lot of the work that I do for exit planning, gift and estate, even divorce work, we're dealing with a standard value, fair market value,
Okay.
which is different than investment value.
Okay.
And it's something that we have to educate all the parties that are involved to what is that definition and why is it different. Example would be a business broker is going to go in and give you a price that they anticipate they can market the business for. Is that value?
Right.
Not necessarily. It should be close. But there's that variance in there. Their anticipated current market is different than a fair market value approach. So
Okay. Yeah, you should know that, Darren. You were a business broker at one time, so you know
Correct.
the difference between the two.
Right.
Yeah. Okay. Good. At the end of this video, we'll show you how to subscribe to our free newsletter, download free guides, and have an opportunity to win free books from Amazon.